Hello, hello, hello. Happy Tuesday afternoon, everyone. How is everyone doing? Good afternoon, Donald. Hey, Patrick. Hey, Daniel. If I remember, we'll get to SOXS Williams. No, hi first, William. Hey, Deshambi. Am I saying your name correctly? I really hate mispronouncing names and I'm really bad at it. I hope I said it. Good afternoon. Yeah, big day tomorrow. We got CPI. Yes, we have FOMC minutes as well. Also, remember we have bank earnings kicking off on Friday, so we will get some reaction tomorrow, but Friday will be the bigger reaction for banks. We can discuss secondary reactions. I'll just go over the concept. After we have Bob on first, let me just, again, the rest of the day today, we had very little stuff going on. Tomorrow, we have the CPI. We'll get Bob's thoughts on that. Then we just have the EIA numbers and the FOMC minutes. We'll see if Bob thinks there's any importance with that, because I know everybody's tuning in to listen to the Bob. And we have PPI on Thursday, but everybody's focused on tomorrow. Mega caps, besides Tesla pulling back today. Basic materials very strong. Energy very strong. Financials holding up pretty well today. Fed watch is at 70% for the rate hike. 25 basis rate hike in May in how many days? 21 days, 21 hours. And we're still in greed mode. In terms of earnings, nothing really tomorrow before or after the close. Delta really Delta Progressive, Infosys sort of gets it going a little on Thursday, but Friday is the big day with banks going. Alrighty, pretty much a doji day in the S&P. Volume is absolutely atrocious. I mean, a little slightly higher than yesterday, but yesterday was still being Easter Monday, and we can't even eke out anything today. Just ugh. Oh well. With that, let's bring on Bob Iacchino.
You are excited today.
Oh, no, I had a little caffeine right before the live stream. So
Clearly, you are very excited today.
yeah,
What's going
can
on?
you see the extra intonation in my voice?
There's a lot of it.
Oh, let me
There's
hold
a lot
on, hold on. I
of
didn't
extra
say hello to
information.
Options 22, Anissa. Hey, William. Hello, Martinez. All right, I am saying Tashambi's name correctly. I am glad. And hey, John. No, SPY or well, the the S&P futures just missed the double top territory. We got to follow the rules. All right. So, Bob, what are your thoughts going with CPI tomorrow? With the anything with the meeting minutes from the Fed? Anything important going on in the market realm?
So I think CPI is important from a perspective of sort of matching what PCE has been doing, which PCE on a month-to-month basis has been pretty volatile, but CPI has been pretty steady. So I think that is important. Um, I don't necessarily think the ultimate level, unless it's way out of whack, matters as much. Um, the month over month obviously matters a lot. The core matters even more. So we'll start with that. The second thing I would say is that the FOMC minutes matter only because that's right around when we were involved in the what do you call it? The banking crisis. That would have been the FOMC, where they may have something to say about um, their thought process during that little mini community banking crisis. And I'd be interested in that. But I actually think it's going to be a little bit of a non event. I think CPI would have to be dramatically higher to change the trajectory. I'm sure you looked at it. 25 basis point rate hike has been creeping higher as the stronger possibility. They're still pricing in those rate cuts, and I don't think anything in CPI is going to change that. Um, I think we'd have to get quite a weak CPI to change, or quite a strong CPI to even adjust that a little bit. I think it's the Fed speak over the next few days that might help. But I mean, John Williams, said we got our work cut out ahead of us to get inflation down to 2%, and yet still they're pricing in these cuts. So it's going to be interesting because I think that what we're seeing with this particular 25 basis point rate hike being priced in slowly and steadily as the higher probability is what we're likely going to see every month going forward on the unchanged stance. We're going to start to see it shift the probabilities every month until the Fed actually has something break. It's interesting. Jimmy Ariorio, and he's not the only one, say that the Fed's going to break things, and now they broke something, so they're going to have to pause. They're going to have to pivot. Broke and fixed, right? Now, I don't think it is, but I think the market does. I got a text today, and I'm going to read it to you guys, and then I'll pause for questions. Where is it? Where is it? Deficit in the first 6 months of fiscal year 2023 surpasses 1 trillion. Lower receipts from the Fed is part of the reason. So then this friend of mine added into that, Fed is underwater as much as banks, by the way. I think that's a stronger driver to cut rates, but that's not going to be affected as much by rate cuts as the longer end is. So if we start to see inflation just kind of sitting, you're going to see longer end go higher. So that's really more where it is. Inflation has to continue to come down, not because it's going to change what the Fed does at the next meeting, but it's going to change the way that the Fed is looking at the next 6 to 8 months, which is where these rate cuts are priced in.
All right. One thing that I don't really hear discussed much, and it's the one I'm most worried about because it seems that not I can't say everybody, but the people who are expecting a pause or rapid easing, they think it's Fed's going to break something and automatically that inflation is going to magically just plummet.
Right.
I don't hear very much talk of the stagflation front still. People are saying like inflation, yeah, we're going to hit the recession and inflation is just magically going to disappear.
Right.
What if it doesn't? That's always my question. What if it doesn't? And I always get it's going to. Literally and I'm not saying I talk to everybody because of course I don't talk to everybody, but the camp of people I talk to who are in either they're going to pause and then the moment something again snaps, they're going to start cutting. I asked and I said, well, what about inflation? They say, oh, it's going back below zero. I said, what if it doesn't? And they don't have an answer. They're like, it's going to. Besides, it's going to. And I say, what if it doesn't? And there's just dead silence at that point. So what are your thoughts on that?
Well, I think it's not going to 2%. And again, that's when I think these these cuts are going to start to be priced out, and it's going to be little by little because what you just said really is what people think. From the perspective of it very much reminds me, Mike, of the people you would talk to where they would say things like, well, just buy Tesla all the time. And you would say, well, what if it goes down? Well, it never does. And then it did. Right. So from that perspective, I think that's kind of what's going on here is you have just a complete detachment from any other option. Right. And that's where we run into problems because generally that's what happens that's when other options show themselves. So one of the things that bothers me about my view is of the October lows not being the lows is it's the consensus. But I think it's slowly leaving the consensus. In other words, it's slowly not the consensus for too much longer. People are starting to fall out of that consensus. And the consensus right now is that inflation is going to go down to 2%. And it cracks me up. Not cracks me up. I shouldn't say that. That's not fair. I find it mind-boggling that people think that as long as it took inflation to get here, which is, to this level, to the level we were at on the highs, 40 years. To this level, if we look at it as saying 4 or 5%, we haven't been here since 2018. why people think it would just fall off a cliff, especially when you're talking about wage inflation being part of the driver. So 2023, I think there's a strong possibility there's no rate cuts, none. I think that's the highest probability. So
Yeah, and I mean, if inflation sticks, let's say we go into a recession and inflation sticks like at 4 or 4.5%, then what? I mean,
that's stagflation,
yeah,
and
that's
that
going
is
to be
very that is
brutal.
very, yeah, and that's a horrible market for stocks. That's a horrible circumstance for equities. Equities don't perform well when that's the case because you have higher prices and you have people buying less.
Yeah,
So that tends to hit earnings.
you know, we like to analyze both sides of the market because it helps us prepare. But that's why my question was, well, what happens if we go? I hear very little talk of the stagflation path, but I think that's something that's got to
I think
be
it's
in
the
your
most,
mind at least.
I think it's the most likely. I really
So
do. And again, like the jobs number didn't help, man. The jobs number, had a higher participation rate and a lower unemployment rate. So that means the Fed can stick. That's what people don't understand, man. As long as labor, and there are some cracks in labor. I mean, jobless claims is one of the leading indicators, and we just had 2 weeks in a row of over 200 when you consider that the prior week was revised higher from 190 and change to 261. And then we had an over 200 number for this past week. And that's one of the places where you start to see the layoffs show up. Now, we talked about that. We said, some of the layoffs we've seen have involved severances and people can't claim. Well, now maybe we're starting to see that come in. But you're still at frickin' what was 3.4 or 3.5 with
yeah,
a participation rate that's going higher and a JOLTS jobs number that's falling. That's a strong labor market. So why anyone thinks the Fed needs to cut is beyond me with inflation where it is.
and the Fed speakers have still been stressing. We can go to 4.5%. Well, we're at 3.5%. We're a whole percentage point off. So even if it ticks up slowly, it's going to get interesting. I would just wanted your thoughts again because
Yeah, no, I think stagflation is the most likely outcome right now.
which is the
The
worst
most likely.
possible outcome. I mean,
Yeah, worst possible outcome for markets.
it's the worst possible outcome for people in general. It's not just the
Yeah,
markets. I
right.
mean, it's better, I think, if, all right, fine, we have a recession and great, inflation falls off the table and we're back to like under 2%. Well, fine, yeah, you had to go through a recession, but inflation's come back down. That's way better to me than a recession and inflation with people losing their jobs and, okay, and goods aren't coming down rapidly.
Right.
So, all right, let's see here. Mike is happy because market reject. I'm not. I don't know why people. I'm happy because market rejected what? I'm not happy bull or bear. I would rather. I'm happy once we get setups.
Right.
A market with setups, whether it's bull or bear, is a setup. That's actionable. A market with no setups, sort of. That's the worst case scenario for me. Hey, no setups.
I think the
Uh,
thing you guys don't understand yet about Mike, and I would put myself in this category as well, is that we don't care what direction things go in. We don't. We're not, and this is something that you guys really need to adopt if you want to continue doing this for a long period of time. Do not attach your own judgment of your own intelligence on whether you were right or wrong in direction. Okay, that does not make you smart or dumb. I don't feel happy or sad based on how a particular call that I make goes, okay, at all, because it has nothing to do with whether um, I'm smart or dumb. We go for setups, right? And if setups work, then that's great. If setups don't work, then that's still great if the setup was correct. It has nothing to do with it. We don't get happy or sad depending on the way a market goes. you got to stop attaching your personal worth to what happens here. We don't do that. So when you say Mike is happy because of something, no, he's not. Has nothing to do with it. Nothing at all.
Let's see where we sit. Oh boy. Hey, George. Hey, Sterling. Bob, what do you think about the M2 dropping?
I didn't even notice it, to be honest.
Well, there
I
you
didn't
go,
even
Dan.
notice it. It's not important, but I didn't notice it. So I
People
can't
really
really answer
like
that.
the interview, I think, with Vivek.
Yeah, Vivek is, he's great. Honestly, he's really, really, he needs to be on the stage. That's the only reason we did that. He's, I characterize him as Trump without the crazy. He didn't really answer that, but I think that kind of a thing is what's necessary, um, to have somebody who's talking about the things, some of the things that Trump talked about, not all, but some of the things that Trump talked about, that without the vitriol and the rhetoric, where you're just actually talking about it and saying this is what we should be doing. So anyway,
Yeah, I thought it was a really good podcast. Zoltan Pozar is on the same page on stagflation. I did not realize that. Good. That's
I didn't realize Zoltan.
gents were slightly oscillating around the 62.5 level on the QQQ NAS from pandemic trough to peak. Your current thoughts around all this new bullish sentiment? Go up or down from here? Oh,
I'm
again,
not sure.
longer term, I still have the longer term stuff I follow is still bearish. Short term, it's going to be, a toss up based off of some key stuff out this week. But, even if we break down a bit, we still have a lot of stuff to chew through to get to major technical damage done. Not saying that can't happen.
Right.
Until that, I'm watching for a major topping pattern. I just don't have one yet. Bob. Hey, Pavneet. I'm confused at times whether money going into 10-year is looking forward to growing economy or seeking safe haven. Direction of yields confuse me at times.
Well, money going into the 10-year, meaning buying the 10-year and lowering rates, would be a weak economy, not a strong economy. Excuse me, because it would be like a flight to safety. The 10-year, or really any US treasuries, is the risk-free rate. So money going into 10 years is a weak economy. So yeah, I'm not sure if I answered the question.
Uh, so let's see. Hey, let's get some more likes, people. We only got 5 likes. Come on, Bob's even taking the time to come on here and grace us with his intelligent answers, as opposed to my rambling. Did you see that the massive weekly potential double bottom in uh, notes in the note futures has confirmed but not triggered yet?
Nice.
So we'll keep an eye on that. I actually think it's even a monthly pattern.
Exactly.
So that'll be interesting, but it's not triggered yet. Doesn't have to trigger yet. But the yield on the micro yield, it has triggered. But I go to the full notes. The full note contract is a little better than the micro yield since it's still newer and thinner volume. Thoughts on crude, Bob? It's holding up really well. We had a strong rotation up today. This is the
Yeah,
highest
today.
close now. Hold up. Sorry. It's the highest
That's all
close
right.
since, wow, Monday the 23rd of January.
Yeah. Um, I still need to see us break out of this channel, but we kind of did if you do a diagonal channel, which, sort of a very soft downward angling channel. We broke out of that. But it's interesting because we're coming up on some strong resistance, and I don't. I don't know if the demand side is going to be there to power this thing up to 100, but if you held a gun to my head, I'd be long. I don't have a position in it.
100 would be, oof. Well, that would really sort of hurt inflation too.
Yeah, it would.
I mean,
Can you put
you
up
know,
Can you put up William S's comment, Mike? Because I want to touch on this a little bit more, and then
okay,
if there's any more questions.
Bob, real question. Are you day trading? That might be why you don't get happy or sad based off market direction. Is that the one?
Yeah. So what I want to talk about is that I've never considered myself a day trader, but I have taken trades off the same day. And this is something else I would love to see you guys get away from. You think that because you're in and out in a day, you're taking less risk. And that's not actually the case. Okay. Smaller positions is what I do than what I used to do. And I have trades with that are risk focused and they have a profit target. And sometimes I get out the same day. Sometimes I get out in 25 days. So I wouldn't call myself a day trader or a swing trader. But the point is, William, is like you're talking about what you're referencing, and you could correct me if I'm assuming something wrong. You're referencing winning trades making me happy or unhappy, and neither one, it doesn't work that way. Now, it does work that way just from a human, an emotional standpoint. But if I put on a trade correctly, winning trades, losing trades are the complementary probability to winning trades. They all fit within the same box of work that I'm doing. So I think the answer to your question would be no, I'm not day trading, but I am sometimes out in a day. So if somebody said to me, Bob, are you swing trading? I'd say no, but sometimes the hold times make it look like I'm swing trading. So I don't classify things like that. So I don't get happy or sad. Let me rephrase that. I try hard not to be happy or sad with the outcome of trades. Because if you do that, if you have a bunch of losers in a row, you start deviating from your process because you really want to be happy. And if the only thing that makes you happy is winning trades, in the course of your work, I try to put on every correct trade that I see. And then the outcome is the outcome. And what makes me happy is when I stick to the process. That makes sense?
Uh, Bob, Mike, thoughts on the rare swag breadth thrust indicator flashing a buy yesterday. This indicator triggers when stocks go from oversold to overbought in a short time frame. It's only triggered 14 times since 1950, and the S&P 500 was higher a year later.
I wonder how many times the S&P 500 was higher a year later based on anything,
Well,
just
also,
anything at all.
by the way, it triggered in very low volume, and hey, we could be higher a year from now. We could also drop 1,000 points before going higher.
Yeah, that's the issue with it, right? Looking at something a year later, how much can you hold? Like if we drop 40% and then we end up higher 9 months after that, are you okay with that? I've never, I don't, I've never followed that particular indicator, so I don't have any thoughts on it at all. But again, I tell a story all the time. Mike, you've heard this story when I was on with an analyst talking about the British pound, and they had us both on a year later, and it had hit his target, but it had gone down about 60% before it did, and it hit my target on the downside, and then rallied up to his target. Actually, I'm sorry, it missed my target by a little bit, but it rallied up to his target, and then that's when they had us back on. So, I just like, yeah, I don't exactly.
Take
I'm
any
tired.
BTC Bitcoin profits, Bob?
No, not yet. Haven't
What
done it yet. I
else?
like the chart.
What were you saying, Bob? Sorry, I interrupted you.
No, I like the chart on Bitcoin. I had stopped talking about the other thing. I kind of faded off. I said I'm tired. But if it comes back down and tests that little channel that just broke out of and then fails, then I might take some. But otherwise, no. I'm just adjusting stops.
Bob, the Asian markets don't show colors of China reopening, but I remember in a podcast someone talked about a strong reopening, referring to air pollution around the embassy. What are your thoughts? What's your reading on China?
My reading is I'm not seeing strong reopening. So, but it still might be bullish for things like copper because you look at like today, for example, copper had its strongest day in about a month, maybe a little bit less than that. And part of it was because Chinese new yuan loans were up, but Chinese inflation was down less than expected, and their month over month was negative. And so when you look at that, you think, okay, the stimulus is going to continue. The Chinese new yuan loans were higher than expected by about 655 billion yuan, and within that is a bunch of stimulus from the government. So the fact that their inflation was lower than expected and their month over month was negative, that means that um, stimulus is not going to stop; it's going to continue. So that can be a little bullish for some of the commodities like crude oil and copper specifically. Also soybeans.
Bob, what's the average time between change in oil prices that can reflect an inflation reading?
Oh God, I don't know. I'd have to look that up. I would say watch gas prices. Like right, if you look at gas prices relative to oil prices, there's a lag in the change, more so to the downside than to the upside. But there's a pretty big spread right now because crude oil went up quite a bit and gas prices didn't follow. But crude oil had gone down quite a bit and gas prices didn't follow then either. Somebody in here said the oil companies were squeezing consumers again, but then they didn't complain that they didn't go up as fast when oil price spiked. But if I had to guess, I'd say it's somewhere around 6 months, but that would be a guess. Not something I would. You want to watch the gasoline price changes and the jet fuel price changes more so than the crude oil price change.
Bob, your thesis for Bitcoin markets believe inflation won't be controlled and that assets will rise in price like Bitcoin or gold, or was it something else?
No, that's pretty close. I mean, my thesis for Bitcoin. So Bitcoin is having liquidity issues right now. There's not a lot of liquidity in it. So that's why, just to William S., I'm not day trading Bitcoin. It has had very low liquidity lately. You can find it on Coinbase's website, the volume indicators there on the cash side. So the volume has been very, very low. And that is two things. Number one, the moves are exaggerated. But number two, the I'm stealing this from Bloomberg. They called it the Bitcoin tourists are not really being involved. It's just like the locals, the whole hodlers are the ones that are buying it now. And without the tourists there, you don't get these large volume spikes, but it's more the true believers that are buying it, and that takes a little bit of the volatility out of the market. One of the things I like about Bitcoin right now is the correlation to the Nasdaq isn't there. When Bitcoin is correlated to the Nasdaq, then it's really a speculative risk asset based on people who believe in the Nasdaq are also speculating on Bitcoin. So if that correlation comes back, that also might be a reason for me to take profits because I don't think the Nasdaq lows are in. But I like that the correlation is gone, at least for now, to Nasdaq. So,
Thanks.
and this, I'm sorry, and I got off my own subject. I'm sorry, Mike. And the second thing is, as long as they're pushing the central bank digital currency, to me, it's bullish for Bitcoin.
Until they shut it all down because they don't want
Agreed.
to interfere with it.
Agreed.
Bob, what's your favorite trading indicator?
Honestly, a rotation zone. My favorite patterns are doubles, and my favorite indicator is the rotation zone.
Well, there we go. All right. Any final thoughts? Oh, hold on. Then this is it. Then we'll get Bob's final thoughts, and I gotta wrap this up. Bob, Mike, looking at FRC First Republic Bank, it looks like it is stabilizing. I have a market maker out of Florida saying buy, it won't go under. Bankrupt thoughts?
No, I don't really have any thoughts specifically on First Republic. I don't know any market makers in these stocks. I don't like. I mean, you look at that chart. I would never buy that chart in a million years. I would wait for some bottoming and some rallying, and I'm sure Mike would say the same thing. But from a perspective of somebody telling you that you should buy it here, to me, that's almost a reverse indicator.
Yeah.
Doesn't mean it's not going to go up, by the way, options. Doesn't mean it's not going to go up. It just means the risk reward to me is not in the right place. I don't think the bank problems are done by a long shot. Um, Talking about like, the Fed um, receipts being down and the Fed's portfolio being underwater. And I don't think it's over by a long shot, but it doesn't mean First Republic's problems aren't over. They might be.
The last question is a question for basically all the public regional tier 2, 3 banks. So, what are your thoughts on
It's
all?
too, I don't think the banking, I don't think the 2, 3 tier banking problems are over, but it's really too specific for a question. I don't think the problems are over by a long shot. But if the Fed were to start cutting rates aggressively, then they would be. And the market currently has that priced in, which would be why a lot of people would say to buy this area right now. But I don't think those rate cuts are going to happen. So I could be wrong.
All right. Any parting thoughts, Bob?
No, I think I got my thoughts out.
All right. Well, thank you for tuning in. We'll be back on Thursday.
Yeah, I'll be here.
All right. Then we will catch you again on Thursday. Thanks. Have a wonderful
All right,
evening.
guys.
I'll get an SOXS. I just had to wrap it up with Bob. Eh, You know, the bear shares, yeah. Once we get some, it would be a bottoming pattern here or a topping pattern in the semis. I hate trading the triple leverage stuff, especially the bear triple leverage stuff. Your timing has to be pretty well. But if you want to watch something that moves above 23, you could get a quick little pop up. And I'd only be watching for a short term pop because these things bleed out. Uh, Again, I think if it, I have no idea on the inflation numbers coming out tomorrow. I just, you know what? I think they'll come in more so in line. I doubt there'll be a major surprise. But you know what? Again, we start breaking above today's high with daily cycles at the bottom. I have my levels higher. We break below today's low and weekly takes over, we really have to start getting though below the low from last Thursday to start getting into a bigger sell-off. So if we get anything that's, I still think people want to buy this gosh darn market, even though it's priced for perfection. So it would not surprise me to see another pop higher and we'll go from there before we get cycles everything to the top again, and we'll see if there's still a good bear setup. Why don't you save that till Thursday, Donald? Henry, come back on Thursday. You need to, if you're losing on every trade, you're doing something incredibly wrong. You should not be losing on every trade. Again, are you following some systematic approach? Or are you just, hey, this is the flavor of the day? But even losing on every trade, you're fundamentally just doing something off. There's even if you didn't have a system to lose on every trade, you're either not putting your stops, not using targets, something's wrong with your methodology. All right. So, again, daily cycles at the bottom, weekly cycles at the top, not rolling over. Here's what's interesting. Even if we sell off, there's been a lot of buying pressure below this 4100 to about 4095. We really need to break 4095 to get some significant downward pressure. This did not get enough in the double top territory, so it's not a double top. Again, break higher tomorrow. I'll be using the 41.53, 41.62, 41.71 targets. If we break above 41.71, using reverse harmonics, which gives me a major cluster at 41.90 to 41.94. To the downside, we break below this 40.95 area. I'm focusing on these two, this topping area, the prior topping area, and the bottom of the rotation zone. For the NASDAQ, remember the breakout areas from prior is about 12,850. So we're coming into a major support. So that's my first primary target on a breakdown. And then my target below that would be about 12.7 on a bigger thing. Do we have a major topping pattern? No. So on a rotation up, especially above today's high, 13,251, 13.3, and then 13, about 350 is key for me, and then about 13.4. The Dow still has a potential double top in place. If we move up substantially tomorrow, it will be off the table, and the next major target is 34,078. In order to trigger the double, I'd at least need a decent time frame close below 33.486, and that would preferably be a 4-hour time frame. Russell still in the middle of consolidation. If we break higher substantially, I'm looking at 1827 as key major resistance area. VIX, again, this is going in, volatility is incredibly low even on the weeklies. So from my perspective, it's a great to do a straddle kind of play going into the number because volatility is priced so low. If you're going to take a shot, DAX, we still have a potential double top, so be keeping an eye on that tomorrow. Notes, thanks for the correction against sterling. So on this one, it did trigger the double officially. I missed that last week. Not that it really matters because I like pullback movements to get better reward to risk, and this will take a long time to complete. Dollar index, we do have a potential double bottom now in place, but that's a long way off from triggering. So I'll be keeping an eye on that. Other than that, if we break lower and watch for a retest of Monday's lows and then possibly key support about 150. I think the dollar's demise is getting way overdone. Crude, watching for if inflation comes in hot, it could be interesting for a breakout play with crude, but my primary target is about 83.91. That's really about it. Like for the euro and the pound, I'm watching if it does sell off. I'm watching for the bottom of the rotation zone. Other than that, on any rally, I'm watching for a potential double top plays setting up. So I don't like the why questions. Why Bitcoin? I think it's at the end of a move personally with everything I'm following on Bitcoin, but it's in trailing mode until then. So that's where it sits. Next potential target area is 31,280. Tesla still in this huge choppy area. The double's still in play, but not triggered yet. I know we had spider questions from earlier. Spiders, if you're looking at this, is this a potential double in the spiders? The S&P isn't, but the spiders are. Okay, so the spiders, you need the close below 405.68. And that would be the pullback. And in the Qs, there is no fantastic setup right now either. So That's where we sit today. Going to wrap it up for now. I shall see everybody after the CPI number comes out tomorrow. Have a wonderful evening. Bye for now.